family mode.
Hello everyone, and welcome to this week's webinar, where today we're going to be going over how anyone can get approved for business financing. And I'm glad everybody is able to attend today and to join us. This is a very powerful topic that we're going to be going over today. And when I was actually putting together the name of this webinar, I had to stop when I got to the part of anyone. Because even though I know, and you're going to learn by the end of this webinar today, how anyone really can get approved for business financing, the reality is the title itself kind of creates some skepticism because most people who've tried to get financing and credit for their business have failed. That's the reality. And so in this webinar today, we're going to kind of reveal that secret formula for approval. I'm going to talk to you about exactly how anyone, and I mean anyone, can really get approved for business credit and financing. And we're going to get started by first diving into the problem. We're going to talk about why so many people think they can't get financing. We're going to look at the conventional loan process. We're going to dissect it. You're going to know exactly what is required to qualify for conventional financing and SBA financing. Then we're going to follow that up by talking about how anyone really can get approved for financing based on the business strengths. And I'm going to introduce you to a lot of different funding programs that might work for you and your business, or even for your customers if you're attending this webinar to help customers with obtaining business credit financing. And most of these financing options you probably don't even know exist. So a lot of stuff that we're going to be diving into today. We're going to dissect this process of SBA conventional loans. We're going to talk about the problem of why people can't get financing, and then we're going to dive in very aggressively to talk about how anybody really can get financing and exactly how to go about it. So before we get too far in, let me first introduce myself. For those of you that haven't attended one of my webinars before, my name is Ty Crandall. I'm actually the Director of Business Services here at Credit Suite. My role is to help companies offer business credit and financing for their clients. And in my role, I oversee millions and millions and millions of dollars in funding for consumers. And I see them obtain credit. I see them obtain financing even when a lot of them think they can't. So if I can ever help you, if you need help building your business credit or financing, feel free to get in touch with me. I can connect you with someone that can help with that. If you're interested in offering business credit financing for clients, I can definitely help you with that. And if you have any other general questions about financing and credit, feel free to reach out to me and give me a call or send me an email. Right there is my number. It's 877-600-2487. It's going to be on the final slide that comes up at the very end of this webinar. And so there's my email address too, ty@creditsuite.com. So let's dive in. Let's talk a little bit more. First, let's talk about conventional loans. Now, conventional loans are loans that you're going to basically receive if you go to your bank. So if you walk into your bank today to get a business loan, you're going to be looking at some kind of conventional loan. And typically, almost all banks, small and big, offer SBA loans as their primary business funding program. And these type of conventional bank loans are very hard to qualify for several reasons. One of the reasons that these loans are so hard to qualify for is because, first of all, you have to qualify for SBA and the actual lender themselves. Look, a lot of people think if you want an SBA loan, you go to SBA. That's not the case. What really happens is if you want an SBA loan, you go to your bank, and your bank gets you the SBA loan. So in doing so, the problem is you have two qualifications you have to meet. First, you have to meet SBA's rigorous requirements, which we're about ready to dissect. I'm going to show you exactly what it takes to get approved for their loans. You also then have to qualify for the lender. So you have to qualify at both places, which is one of the many reasons that these SBA conventional type loans are so tough to qualify for. Now, another reason these loans are tough to qualify for, and one of the main reasons, is that SBA and the lender will evaluate all aspects of your business for approval. And to get approved, all aspects of your business and the business owner's personal finances have to be near perfect to ever get approved. Let me give you an example. We have seen a client with a 780 credit score with one derogatory item get turned down from an SBA loan just because he had one derogatory item. And on and on and on and on. I can give you example after example of people that don't qualify, but the reality is I don't need to give you examples. You already know this. If you think about it, you probably can't clearly think of anybody you know who's ever told you they got an SBA loan. And if you can think of somebody, which very rarely do I run into somebody that can, then you probably can't think of 2 or 3 people that have ever done this. Why is it so rare that people qualify for these loans? Well, for some of these reasons. They have to qualify for SBA in the bank, and most importantly, all aspects of their business have to be perfect. Most people don't have perfect businesses and therefore don't qualify for these type of loans. So let's take a look at what's actually required. Now, what I'm going to go through with you is from SBA's website themselves. Okay, this comes directly, literally copied and pasted from SBA's website. So I'm going to walk you through and show you the exact process for qualifying for SBA loan. Now, this is going to be beneficial for a couple reasons. First of all, you're going to quickly realize why so many people don't qualify for these loans. And secondly, if your interest is in applying for these loans, then you're going to know exactly what's required, what steps you have to take, and what income documents, those type of things are required, so you'll know exactly if you stand a good chance of getting approved or if you'd be denied. So let's take a look at the actual SBA loan process. This is an actual application for an SBA loan, okay? This is, I'm taking snippets of the actual application, putting them on slides so you can actually see it. And I want to go through literally each one of these lines so we can talk about the questions they're asking. I'll take a swig of water here in between, so please don't mind me. Okay, so first of all, they're going to ask you pretty basic stuff, right? Tax ID, address, name, those type of things. They're also going to ask you what you're using the proceeds for, land acquisition, new construction, inventory purchase, all of these type of things. Are you paying off an SBA loan? What is the purpose of that actual loan that you're applying for? Now, on the application, they're also going to ask you about any other previous SBA loans and government debt. Look, if you've ever defaulted on an SBA loan before, well, you could pretty much rule out your chances of ever getting approved for an SBA loan. As a matter of fact, if you defaulted on student loans or any other kind of government debt, you could pretty much rule out the fact that you're ever going to get an SBA loan. Okay, it's the same with an FHA mortgage. You're not going to go get an FHA mortgage if you've defaulted on an SBA loan. So a lot of these things, government debt, SBA, if you've defaulted on these kind of loans in the past, or been slow pay, then automatically it's a disqualify for most SBA programs. This is why they're actually asking you those questions. Now, they're also going to ask you about all of your actual indebtedness. So they're looking at business indebtedness. Furnish the following information of all outstanding installments, debts, contracts, notes, and mortgage payable for the business. So every account that you have for that business needs to be listed. Account number, original amount, original date, present balance, rate of interest, maturity date, monthly payment, security that you used, current or past due amount. Okay, and then the same thing with your actual business partners. You're also going to need to list some information for each business partner. So everybody that has, I think, 20% interest in the actual business itself has to be listed: name, social security number, complete address, percentage of company they own, if they're a veteran, gender. So that's part of the application process, and then, or part of the actual application. Here's another part where they're going to tell you right here what else you're going to need. You're going to need a statement of personal history. You're going to need collateral. List all of your collateral: land and building, machinery and equipment, furniture, all furniture and fixtures, all of your accounts receivables, your inventory, and all other anything you own of a value of over $5,000 is expected to be listed on this actual application. Okay, you've got to sign a personal balance sheet, which we're actually going to look at in a minute. You have to include financial statements for 3 years, currently within 90 days of filing the application. All information must be signed and dated. You're going to need balance sheets, profit and loss statements for 3 years. Okay, this is what they're asking for. Reconciliation of net worth, aging of accounts receivable and payment summary, and anything else to do with SBA loans. You're going to provide a brief history of your company and paragraph describing the expected benefits of the financing. You're going to provide a brief description similar to a resume of the education, technical and business background of all business people listed under the management. So we're still on the first document that SBA gives you, which is their actual application. And don't get tired on me yet, because we're literally not even scratching the surface yet of exactly what SBA looks for to approve a loan. Here's the rest of that actual application. So you will have to submit a tax ID number, EIN, on everybody, current personal financial statements, for anybody that's listed in the business, the list of machinery, we already know. They're going to ask if you've been convicted of a felony or if you are involved in any kind of pending lawsuits. A lot of people don't know this, but this is public record. Dun & Bradstreet, right now, I can in my Hoover system pull up any company and know if they've had pending lawsuits or not. So this is really easily accessible information. Have you ever had a bankruptcy? Your company had a bankruptcy? Do you or your spouse or any member of the household own, manage, or direct your business? Okay, so this is asking if you work for the SBA. Do you have a majority? Okay, so these are all questions that are pretty similar to something we've already went over. They're going to look at criminal background. They're going to look at, that's about it, anything we haven't already covered so far on this application. And then here it is. They're going to ask you for just certify some things, counseling, training. They're going to, have you done that? Are you looking for any kind of export loans, constructions only? So if you're looking for some specific kind of financing, there's some additional fields they're going to have you fill out here also, and then you're going to basically certify and sign. Okay, so that is the first part of the process of SBA. That's the actual application that you have to fill out. Now, you already see there's a ton of investigation and information here, right? I mean, you have to get everything, your business assets, your personal assets, P&Ls, financial statements for 3 years. I mean, everything they're going to ask for on that application. Now, another thing they're going to ask you for is they're going to look into your personal background. Again, this is not for me. This is literally copied and pasted right from SBA's website, so you can see exactly what's actually involved with getting approved. So they're going to do a background check. Either as part of the loan application, separate document, they're going to ask you for background information, including all of your previous addresses, any names you've used, your criminal record, your educational background, and etc. is what's going to be required in this actual personal background. Here's the statement of personal history. So this is where they actually get that information. This is just your name, your date of birth, pretty basic stuff. Here's when you start getting into them asking you if you've ever been convicted, if you've ever been arrested before. Here's your financial statement, the personal financial statement. Everybody that owns more than 20% of the business must fill out a personal financial statement per SBA. This is it. Okay, look, this is great. I mean, in this webinar, you're going to see exactly what's involved. So here is the personal financial statement that they actually have you fill out. You need to account personally for every asset you have, all of your savings accounts, IRAs, accounts, notes, receivables, life insurance, stocks, bonds, real estate, cars, personal property, all other assets. And the same with liabilities. You got to account for all liabilities you have. Auto loans, you have mortgages, you have life insurance. Do you have unpaid taxes? What is your net worth? All of these things have to be accounted for by 20%. By 20% of the actual, anybody that owns more than 20% of the business actually has to fill this out. So that's what's actually involved. Now, there's a lot of information, as you can see here. Salary, what your net investment income, real estate income, legal claims and judgments against you. All of this information has to be disclosed on the actual personal financial statement. So this is all just one statement called the personal financial statement, going over the information that you're actually going to have to complete on the personal side. Again, anybody that owns more than 20% of the business needs to complete this. And then this continues. Notes payable to banks. This talks about all the notes. This talks about stocks, all the specifics, the number of shares, name of securities, cost, market value, all of these type of things. And then date purchased, real estate, you know, what you have, mortgages, how much do you owe, what other personal assets do you have, unpaid taxes, other unpaid liabilities. And again, just like anything else, you're going to certify this just like you did the application. They're going to ask for resumes. Okay, so they're going to want to know everything about you running this business. And they're not just asking you. I'm going to stop here and remind you that this stuff isn't just being asked for pure entertainment. Okay, they're not just asking you for this because they're just wanting to see you run around and chase your tail. Every single document you supply to a lender, every single line on that application will be verified and scrutinized. So every single thing that you're being asked to provide here is them looking for a weakness, a reason to decline you. Now, they're not trying to find a reason to deny you. What they're trying to do is expose their risk. It's as simple as that. By looking at all aspects of your business, by dissecting everything you do personal and business-wise, they want to know everything so they can really figure out what kind of risk they're exposed to. So any of these things you're being asked for is absolutely grounds for your loan being denied. The same here with the resume. They're not just, SBA is not just asking you for a resume because they just want to see that you have the capabilities to fill out a resume. They're trying to verify that you have what they deem to be proper experience in your field. They want to make sure you're experienced in what you're doing. Even if you're running a good business and you don't have experience in that field, again, it could be grounds for denial. So resumes, again, anybody with ownership interest in more than 20% of the company is going to need to submit that. You're going to need a business plan. Okay, so the business plan should include a complete set of projected financial statements, including profit, loss, cash flow, and balance sheets. Well, now not only do you need to provide 3 years of financial statements, profit, loss, and balance sheets, now they want you to provide projected financial statements, profit and loss statements, and balance sheets to show where the business is going, not just where the business has actually been. They're going to ask you for a personal credit report, okay? And it's important to know exactly what their language is on this personal credit report. You should obtain a credit report from all 3 major business credit reporting agencies. Okay, inaccuracies and blemishes on your credit report can hurt your chances of getting a loan approved. It's critical to try to clear these up before beginning the application process. SBA is nicely telling you, don't even apply if you have credit issues. They refer to them as blemishes. They're not even talking to you about having bad credit. They're saying, look, here's the deal. Inaccuracies and any kind of blemish, even on your credit report, can hurt your chances of getting approved. You need to clear that stuff up before you even bother applying. I already told you the example of I've seen 780 credit score clients denied by SBA because of one derogatory item on the credit report. Here's right from their website where they're saying the exact same thing. Look, if you have blemishes, you need to have them cleared up, because if you don't, you probably ain't going to get approved. So again, personal credit's very important with SBAs. From what we found, they're looking for, well, nearly perfect credit. They're looking for no derogatory information, and a lot of lenders have told us that you can't even apply unless you're a 780 score. They won't even let you apply unless you're a 780 score because they know you won't get approved. So that gives you an idea of the kind of credit that SBA is actually looking at. Business credit report. Okay, so they want to see copies of your actual business credit. And again, as with the personal credit, it's important to review your business credit report before beginning the application process. Why? Because if you have derogatories and blemishes on your business credit report, then just like the consumer, you're probably going to have those fixed before applying. Now, this is very important to note, because 90% of business owners don't even know what business credit is, but it's an absolute requirement here to qualify for SBA loans. They want to see that you have a business credit report. So if you have no business credit established, no business credit report established, then your chances of getting approved for financing are, well, significantly reduced if they exist at all. So you need to have good business credit and nearly flawless personal credit to get approved. Income tax returns. Okay, again, they're going to request these for the business at least for the last 3 years, and in a lot of cases, personally, they're going to request these for 3 years also. Business overview and history. So you're going to need to provide a history of the business and its challenges, include an explanation of why the SBA loan is needed and how it will help the business. I love this. They're flat out asking you, hey, just in case we happen to miss the risk and miss where you're having challenges, tell us where the challenges are so we have a reason to deny you. And again, they're not just wanting to know, oh, you're struggling. It's okay. We're here to help. They're trying to expose their weakness to determine if that weakness is great enough for them to move forward and actually approve the loan. That is why these things are actually being requested. So they're also going to want a business lease. If you own the property, they're going to want all the information on the mortgage. If you lease it, they're going to want a copy of the lease, information from your landlord, and information to contact your landlord also. And if you're purchasing an existing business, then you're going to need a current balance sheet P&L for that business to be purchased, previous 2 years federal income tax returns for that business, proposed bill of sale, asking price with schedule of inventory, machinery, and equipment, furniture, and fixtures. And again, that's all applicable if you're actually going in and buying a business, not if you're getting actual financing for your existing business. They're also going to want to see financial statements. Anybody that has more than 20% ownership, they're going to want personal financial statements. May also be required to see projected financial statements. We've already talked about this for the business, but now this is for the personal. So now SBA is saying not only do we want projected financials and 90 days worth for the business, but we're also possibly going to ask you for these for the personal too. So that's why they're telling you to have that stuff prepared. And we've also already talked about business financial statements, P&L statements. And they're also going to want projected financial statements we've already talked about. They're going to want bank statements, okay? At least 1 year of personal and business bank statements to be submitted as part of the loan package. What are they looking for? They're looking for NSFs. They're looking for what your average bank balance is. They're looking for the amount of deposits that you have. Many people don't know, but banks have an internal business credit score. It's called a bank rating. And a bank rating basically scales you if you're a high 5 or mid 5 or low 5 or high 4, mid 4, low 4. And what these things are used to do is determine your actual risk of a bank lending you money. Most people don't even know they have a bank rating, but you do. It's one of the things that every bank looks at when you go to apply for business financing. And this bank rating takes into account those same things. What is your average daily balance? To have the highest bank rating you can have, you need $10,000 in your bank account left over daily. If you have $10,000 left over in your bank account, then you have a high 5 bank rating, which is like the highest bank rating that you can get. And if you have less than 10, then determining how much money you actually have will determine what your actual bank rating is. So, yeah, they're going to look at the bank rating, but they're also looking at the personal and business bank statements to look at the same thing a bank rating determines. What's your average balance? How much you keep in the account? Do you manage the account responsibly? Do you have NSFs? These type of things. They're going to want to make sure that the name on the actual bank account adds up to the licensing, corporation papers, everything else that's associated with it. And again, they just are looking to make sure that you manage your money wisely. So they're not only just going to ask you for the business, they're also going to ask you for the personal and look at both. Okay, they're also going to look at legal documents, so any kind of licensing that you need to have, for example, your corporation papers, anything like that they're going to look at. And what most people don't know, one of the most common reasons we see loans denied at a bank is because something wasn't exactly the same here. Your bank statements, your licensing, your incorporation papers, all of this stuff has to have the exact same to a letter business name, even including DBA, and the same as what's listed in a 411 directory, or you probably won't get approved. But again, they're going to look at articles of incorporation. They're going to look at copies of contracts you have with third parties, all third parties. So if you have any kind of agreement, contract, anything with any third party, they're going to want to know about it. Okay, so let's say you got with a software company to provide you software. Well, and you signed an agreement. Well, they need a copy of that agreement. All third-party contracts, agreements that you have, they're going to need, as well as if you are a franchise, they're going to need franchise agreements. And again, they're going to need copies of all commercial leases. Ownerships and affiliations. You're going to need to include a list and address of any subsidiaries and affiliates, including concerns in which you hold a controlling interest and other concerns that may be affiliated by stock ownership, franchise, proposed merger, or otherwise with you. Again, this is all third parties. So if you basically use a third party for any product that you buy and you use for your business, you're going to need to account for that. They're going to want to know who that affiliate is, who that third party is. They want it all. And not only do they want to know who they are, but they want the contracts, agreements, everything you signed with that actual third party. Business certificate license. Okay, so in Florida, we have things called occupational licenses. Now, every state's a little bit different. Everybody has different different requirements and licenses in your counties and states. Okay, but with this, so that's what they're asking for. What kind of licensing, business certificates do you have? Do you need to be licensed in the field that you're in? Do you need to have any particular licenses in your county? If your business is a corporation, do you have the corporate seal? You need that corporate seal on the actual application form. So all those things are important parts of the actual loan checklist with SBA. And the loan application history. They want records of any loans you've applied for in the past, not just SBA. Okay, but they're looking for loans, all loans that you've applied for in the past. And here's a kicker. After you do all that, they still need collateral. So collateral requirements vary greatly. Okay, they say some programs do not require collateral. Almost all SBA programs require collateral. And here's the kicker. They require about 50% collateral for what you're borrowing. So even if you meet all these requirements and you provide all this stuff, you still have to have collateral equivalent to 50% at least, usually, of whatever it is that you're borrowing. Sometimes it's more. Sometimes you have to have collateral of 100% of what you're borrowing depending on the risk. And that's what it says right here. Loans involving higher risk factors for default require substantial collateral. Okay, again, None of this is from me. I mean, so far, everything you've seen with this SBA, this is copied and pasted from their website. Okay, this is exactly from their website. So they're telling you right here that if you have higher risk, then you're going to require substantial collateral. What does that mean? Like I said, you're going to need in almost all SBA loans 50 to 100% collateral against whatever you're borrowing. And you're going to need strong business plans. Financial statements can help you avoid putting up as much collateral is what they're saying. Okay, so that all being said, here's other questions that the SBA might ask you. Why are you applying for the loan? How will you use the loan proceeds? What assets need to be purchased, and who are the suppliers that you're buying them from? What other business debt you have, and who are your creditors? Who are the members of your management team? So not only do you need resumes now for all owners more than 20%, they're going to want the same thing for all managers in your organization also. Okay, and you're going to have to account for what you use the money for. This isn't like they're just going to give you money so, I don't know, you could just use it for what you need it for. I mean, well, why do that, right? They need to know exactly what you're going to use the loan for. You need to map all that out. And you even need to let them know who you're buying something for and how much you're paying and all those type of details, again, on top of providing resumes for everybody on your management team. So, are you tired? I'm tired. I'm wore out. I'm ready to wrap up this webinar. We're like 26 minutes into it, and I'm tired. I mean, just even looking at their requirements to qualify has me exhausted. It took us this long, and I talked pretty fast just to talk through the requirements. Can you imagine how long it's going to take you to gather all that stuff together? And remember, if any of it isn't perfect, the loan gets denied. So there's no question that SBA loans are tough to qualify for, okay? And this is why, according to the Small Business Lending Index, over 89% of business applications by big banks are denied. Now, you can look across the board. I don't care if it's the Small Business Lending Index or who it is. Any statistic you look at, it's going to show you the same thing. The vast, and I mean vast, majority of these loan applications that are submitted are denied. And in most cases, again, a lot of banks will tell you not even to apply. If you go into banks and you don't have most of the stuff, they'll tell you not even to apply. And if you do look like you have everything and might be a candidate, of those people, almost 90% of them are denied. And again, this is exactly why, as I said in the beginning, you probably know nobody who's ever actually went through and secured an SBA loan before. Very rarely, maybe 1, 2 out of 100 people I ever talked to even know somebody that ever got one of these loans. Now you know why. The other important thing to note is sometimes if you're offering business credit financing, clients will come to you and go, well, hey, I'm just going to go to my bank and get financing. It's laughable. You could just laugh at them hysterically. And why are you laughing? I'll show them this video. Look at this. This is what's required. Go to the website. Go to SBA's website and show them. These loans are so difficult to qualify for that the only people that think they might even have a chance are people that have no idea of the requirements or haven't even applied. And most people, again, that apply, well, the vast majority of them actually get denied. So most business owners struggle to get approved for financing because they and their business, they're not perfect. As you've seen, literally every aspect of your personal and business life will be deceptive. And again, they're not asking for their entertainment. They're asking to figure out where their risk is. Okay, they're looking to make sure everything is perfect so they can issue you a loan. But as a result, most people's business isn't perfect, and so most businesses fail. That's it. They go out of business. They shut their doors. Okay, it's a sad reality. Per SBA themselves, lack of access to capital is one of the main reasons for small business failure. Okay, it's not just SBA. You can look at pretty much any professional business organization, and they all tell you the same thing. Why is it that 90% of businesses fail? Simple. They can't get money when they need it. The business owner starts with a good idea. They use their personal credit. They borrow from their friends and family. They use their personal assets until it's gone, and then an emergency comes up and it wipes them out and they shut down their business. Many businesses follow the same pattern because they need the money. Statistically, 9 out of 10 people that apply don't get the money. Most people are told not even to apply, so it's actually a much greater percentage than 90% of people can't get the money. And then as a result, the business actually fails. And again, it's pretty similar here. 90% of businesses fail. Banks deny 89% of business applications. Pretty interesting that the amount of businesses that fail in the country is almost equally congruent to the amount of businesses that try to get money and actually can't. and get denied. So all of this being said, let me get the negative Nelly out of the way, right? I talked a lot about the problem because I want you to know what's really involved with getting money at a bank. Because the perception out there is that you can't get bank financing. Oh, nobody can get bank financing. Well, that's not true or accurate at all. But most people think this way and believe they can't get money because of what you just saw. Because most people don't go into banks and get money, okay? And that's really what we're going to be talking about in the next part of this webinar, is how you really can get money based on your actual business strengths. Because the reality is there's a lot of capital out there that business owners can obtain, way more money than you probably ever knew existed. It didn't just show up on the scene. The truth is it's been there for quite some time. But the problem is it's not available through most big banks. And see, this is where we've been able with our finance suite to really, really help customers. Because what we find is this. When we go to a customer and say, you want money, where are you going to go to get money? They almost always answer the same answer. I'm going to go to my bank. And then the next question we ask is, if your bank says no, where are you going to go then? And you know what they say? Arms up in the air? I don't know. I have no idea where I'd go to get money if my bank said no. Well, we've already looked at the requirements to qualify for SBA, and don't forget, that's just SBA. They have to meet those requirements, and they still have to meet the bank's requirements to get approved. So we've already seen why most people won't get approved for financing in a bank, and if you talk to your average business owner, if their bank won't approve them, they have no idea where else to go. So that's the problem. It's not that there's a lack of money. It's an access problem. People don't know how to actually access that money that's available to them out there. So this massive amount of money is available, and it is based on your business strengths. And that's what's brilliant about a lot of the financing that's out there. We've seen how SBA does it. They look at all aspects of your business to try to find your business weakness. That's what they're trying to do, is expose your weakness to expose their risk. But there's a lot of financing out there that ignores all of your weaknesses. And as long as you have a strength, you can be approved for financing. Why? Because they don't look at this whole business. They don't do this whole business approach. They're just focusing on your strengths to get money, not your weaknesses. I had to take a swig of water. Okay, so in the mortgage business, FHA kind of worked a little bit like this. With FHA, we could put together letters of explanation that explain the strengths. This is why you should approve this deal. Here's compensating factors. The person has a lot of money in their bank. They have this, they have this. Yes, they have these weaknesses, but look at these strengths. And what's awesome about manually underwritten FHA mortgages is that somebody can still be approved with credit challenges because the lender sees their actual strengths, not their weaknesses. Well, the same thing's available in the business space. It's just, again, most people are used to their bank where they have to go with this whole business approach instead of focusing on their strengths. The strategy of focusing on your strengths to get money is something I've deemed the 3 C's of lending. And the way the 3 C's of lending work is this. First of all, you can get approved for financing based on the strength of your business. All you need is a strength. And your strength can be one of 3 things that I call the 3 C's. The first C is cash flow. Just because your business has consistent cash flow, verifiable per your bank statements, you can get money. Collateral. If you don't have any cash flow, but you have some kind of viable collateral, personal or business, you can also qualify for financing. Or the third C is credit. If you have good personal or business credit, then you can also qualify for financing. Now, you might be on this call going, well, Todd, I don't have any of those. Don't worry. Remember, I told you the name of the webinar is how everyone can get approved for financing, or how anyone can get approved for financing. So if you don't have this, at the end, I'm going to tell you about how you could get business credit. Because if you have business credit, Bill, then you could have a C, even if you don't have good personal credit, don't have collateral, and don't have cash flow. We're going to talk about that. But before we dive into that, let's talk about these 3 C's. Let's dissect what this actually means. So the first thing is you can get approved for financing if your business has consistent cash flow. So does the business have existing cash flow proven by bank statements? That's important Because yes, you can verify income based on your tax returns, but come on, you and I know that your tax return shows a really, really small net income in most cases. Okay, if you have a good accountant, it does, because your accountant's job is to write off as much as they can write off to save you as much money and get your net that you pay taxes on as low as possible. So if you're proving your income with your bank, your tax returns, well, you're going to have a tough time getting approved. Okay, most people aren't going to be able to actually get approved. So hopefully, I know some people are having issues with the audio, and I'm using a I think my internet connection might be the case. So hopefully this is all coming through a cost, because I've had a couple people say that sometimes the audio is a little shaky. But if you're attending this webinar, you're going to get a playback of the webinar, so you can go back and pause it, listen to it, and hopefully it gets a little bit better for you there. But there's nothing I can do on my end to correct this, so hopefully it kind of works itself out. So does the existing business have cash flow proven by bank statements? It's important because, let's be realistic, again, the net income on the tax returns is usually pretty small, whereas the bank statements, you can actually get a better idea of what kind of money is really going through that actual business. Okay, does the business have over $60,000 in annual credit card sales? Okay, so this is another question, is do you have credit card sales? If you have credit card sales, okay, and cash flow then that opens up even more financing for you. So even if you have cash flow going through your business, you could be a good candidate for financing. If you have credit card sales at over $60,000 in credit card sales, that opens up even more financing. And if you have $150,000 just going through your bank account, then that opens up some other financing. So there's really two ways you can qualify for cash flow financing. One is just to show your bank statements. And if you have revenue above $150,000 a year, you stand a good chance of being able to get approved. The other is to supply merchant statements showing you accept credit cards. And if you have credit card sales about $60,000 or more, then again, you stand a really good chance of getting approved. Okay, so that's what cash flow financing is. Now, this is something, first I'll introduce you to a little program called Revenue Lending. We do a tremendous amount of revenue financing with our finance suite because it's fast, easy money. I mean, it's practical to get money funded to you in 3 days with this program. I mean, we see that. We see 3 to 7 day fundings all the time. So here's how revenue lending works. It's a short-term loan of 6 to 18 months. Okay, the loan amounts can be up to $500,000. I've seen loan amounts even higher than that if the business has the cash flow to qualify. You can usually get a loan for about 8 to 12% of whatever your annual revenue is. Your rates are pretty high, 10 to 45% on this, depending on the risk. Risk is credit, time in business, industry, money going through the bank account, balances in your bank account. All those things will determine the risk. Usually if you get your first loan, this next time you come around, your terms are significantly better. But again, fast, easy money, easy to qualify, 520 credit score, and no personal guarantee required. So very popular because people, even with credit challenges, can come in and get this. We have a client that's a doctor. He's got a 580 score, and he was getting ready to shut down his business because he has a $400,000 tax lien. So far, we've got him like $300,000, I think, in revenue lending deals. Now, we're dealing with a private investor loan for him. We're doing like 5 different kinds of financing for the guy. He's going to get well over $400,000 when it's all said and done. But he came to us and said, look, there's no way you're going to get me done. I've already tried to get approved. Nobody can approve me. We're, I think, over $500,000 in funding to this guy as of now. But he's come in and secured multiple revenue lending deals, even with a 580 credit score. So a great part about this program is that even if it goes down to as far as a 520 credit score, even people with credit challenges can get approved. If you've been in business a year, you stand a good chance of getting approved if you have that revenue going through your bank statements. Your terms are going to be kind of high first time around, but then they get much better when you go back for more money, as many people do. The other part of that is merchant advances. There are merchant advances. We even offer merchant credit lines through the Finance Suite that you can go that are based on your actual credit card sales. Again, 6 to 18 months. You can get revolving credit lines. We can help you with that. You're not going to probably find that out there. There's only one source in the country that even offers something like that. Most of these are advances. They're actual loans that you're supplied. You can get loan amounts just like revenue lending up to about $500,000. Okay, you're usually going to get approved for about 1 month's volume. So if you do $50,000 a month, in revenue, you're going to probably get a loan for up to $50,000. Rates are very similar to revenue lending. Again, you can get approved for a 520 credit score with no personal guarantee. They don't want to see high-risk industries. Sometimes they consider people in the financial services, for example, to be high risk. But outside of that, very good, easy, fast money program to qualify for. All you need is consistent credit card sales, and you can qualify even if you have challenged credit. And then there's private money. Private money will actually look at your financials. They're going to want to see 2 years of tax returns, not just bank statements, and they're going to want to see positive sales growth. They want to see that your sales are increasing every year, not decreasing. Some private money wants to see collateral of like 20%, some doesn't. Rates on this is about 8 to 18% on private money usually. Usually you can get a lot of working capital credit lines with about a 650 credit score to qualify. So not as easy as revenue lending and merchant advances, so not as fast. Private money can easily take 6 to 9 months for these loans to close. But if you're looking for a big chunk of change, private money is a great source because even with average credit, some collateral, and decent financials in a make-sense deal, a lot of private investors will do the deal, and they don't ask for, surprisingly, a ton of income documentation to close those deals. So private money is definitely a very good source of capital if you do have good tax returns that show good profits, whereas revenue lending, merchant advances, things like that work a little bit better if you just have, for example, merchant statements or bank statements. And then, of course, there's SBA. Okay, you could qualify if everything is perfect and you have financials for SBA, 10 to 25-year loans. Okay, you need 2 to 3 years of positive financials, at least 50% collateral, good credit. We already looked through all those requirements, but it is a possibility if you do have cash flow that you could qualify. So right now, you could be a good candidate for business financing, not because you have perfect credit, perfect business credit, and everything is perfect, just because, boom, you showed them 4 months of bank statements. Your bank statements show you don't have a bunch of NSFs. You have at least some kind of money left in your bank account at the end of every month. And it shows that you're increasing. Your business is growing. You're not decreasing. Just because you give 4 months bank statements, in as simple as 3 days you can get money based just on your cash flow. Pretty crazy, right? You don't need balance sheets and P&Ls. You don't need personal business financials. You don't need any kind of collateral. You don't even have to personally guarantee the loan. Okay, so this is the kind of money that is out there. It's available. Again, it's just not money you're ever going to see offered through a bank. Okay, because, again, it's risky. We have to be realistic here. SBA is not giving you a bunch of requirements to qualify because they're mean. They're not trying to be mean. They're trying to be smart. And the smart thing is to not even lend in the business space realistically because, again, 90% of businesses fail. It's a very risky space to lend in. This is why banks don't offer many programs. They only offer programs where SBA absorbs 90% of the risk, which means if you default, SBA pays that bank 90% of the loss. So that's why banks offer SBA loans and mostly only SBA loans. The risk on any other kind of financing is too high for them to take on. They still want to be able to offer some kind of business solution, so they offer SBA loans. Okay, so they have something to offer to attract business owners, and a lot of their clients are business owners. But again, SBA takes 90% of the hit in case of default, which is the only reason they offer them. These other programs have a little bit harder to accept terms. The interest rates might be a little bit harder or a little bit higher, but again, the risk is higher, and you're talking about qualifying in a week's time, whereas SBA loans can take 3-6 months sometimes to qualify. So the other C of lending, if you don't have cash flow, is collateral. Even if you do have cash flow, remember each one of these open up other avenues for you. So if you have cash flow, no collateral, and bad credit, you can get money. If you have cash flow and collateral, you could get even more money because it opens up even more financing programs for you, even if you have bad credit. If you had cash flow, credit, and collateral, well, then you could get even more money. So it's important to reiterate that. I'm not telling you you have to have all 3 C's to get money. Only one C gets you the money. So the other C is collateral, account receivables, stocks, cash in hand, inventory, purchase orders, equipment. All of these things are potential forms of actual collateral, equipment, 401ks, some real estate, floor plans, if you're an actual car dealership, book of business, if you're an insurance agent, Any of these type of things can be used as collateral. Now, people ask me all the time, Ty, what can work as collateral? And I just listed a bunch off for you. And my response to them is always the same. What do you have? If you have good, viable collateral, that's not land, because nobody wants land right now, commercial or personal. If you have good, viable collateral, personal or business side, there's a very good chance there's a lender that will let you use that as collateral for business financing. So the real question is not what types of collateral might work, but what types of collateral might you have. Although we will dive in and look a little bit deeper at some of this collateral that you might have. If you have account receivables, meaning other businesses owe you money, you can get advanced as much as 80% of that money within 24 hours. Okay, so let me give you an example. You have business customers. Okay, they hire you to do a job. You're expected to do the job and then get paid sometimes 30, 60, 90 days after the job is done. The problem is you have to incur the cost to do the job and then sometimes wait months to get paid. That causes a cash flow crunch. So what account receivable financing does is it fixes that. You can go, okay, look, this guy owes me $100,000. I'm not getting paid for 90 days, but man, I'm expected to fulfill these other orders, and I'm running light on cash flow. Well, you can get advanced as much as 80,000 of that $100,000 in 24 hours. Boom, here's your 80,000. Okay, then the rest of it is returned to you once that actual invoice is paid. Okay, you've only got to be in business a year. The receivables have to come from another business. The rates are ridiculous. 1.25% to 5%. It's less money than you'd even pay if you were accepting credit cards for the customer. So let me give you two examples. Let's say you're a plumber and your biggest client is a builder and you're expected to go out and do the plumbing for 30 different homes and then you get paid months after. Well, hey, you could use account receivable financing, get paid on that order tomorrow, and then not have to wait 90 days to get paid. Let's say you're a doctor's office. And you're a doctor's office that accepts health insurance, Medicare, and Medicaid. And anybody that's in the medical field knows it's a nightmare to try to get paid on insurance claims, Medicaid, and Medicare. This is why we all walk into doctor's office that don't even accept Medicare, Medicaid, and health insurance because they know it's a struggle to get paid. But with account receivable financing, that doctor could get paid on that the next day, and the lender would actually even collect the money from the actual Medicare, Medicaid, or health insurance. So a major benefit. This works for so many different types of companies where other businesses owe them money and they can then get paid right away so they don't have a cash flow crunch for ridiculous money. And let me tell you what else is crazy about this. You can get approved with a 350 credit score. They care about the credit of the person you have the receivable with, not your personal credit. So I don't care if you're a 400 FICO, 500, 450, 350, they'll still do it all day long at 1.25%, 2% rates, because they're looking at the credit of the business that you're receiving receivables with, not your personal credit. Okay, securities-based line of credit. So let's say you have stocks, bonds. Okay, this you can borrow against those up to 90% loan to value, get an interest rate less than 3% for a working capital credit line, and you can still get approved with challenged credit. The one thing you're going to learn about collateral is that if you have collateral and you're using that as your strength to get financing, even if you have bad personal credit, you can still get very, very good interest rates. I mean, look at this. I'm talking to you about 1 to 3% interest rates on financing for people with bad credit. That's insane, especially if you think the SBA themselves would charge 5 to 8%. So very low interest rate money you can get. Private equity lines of credit. We already talked about those, the 8% rates, the 20% liquid capital. If you have inventory loans, you could use that. If you have minimal inventory of $150,000, you could usually get a loan of about 50% of whatever the value of that inventory is. You can't lump together inventory like office equipment. Okay, they're looking for inventory on shelves. But if you have inventory on shelves, like you own a paint store or whatever where you have a lot of inventory, again, you can get interest rates less than 2% on lines of credit. Okay. So a factory, retail store has inventory, good examples. Purchase order financing. Let's say somebody comes to you. I had a client that actually owned a manufacturing company. And what he does is he does plastic molds. So he got an order from Busch Gardens. So he's expected to produce X amount, like 20,000 cups for Busch Gardens. The problem is he has to go buy these big chunks of plastic to make the plastic cups from. So purchase order financing for him would work because we could get him the money to purchase the plastic that he would use to make the cups to sell to Busch Gardens. So he's not out his own money to buy the supplies to fulfill that order. That's what purchase order financing is. It's a letter of credit. Again, don't care about personal credit, and it's very good to help companies fulfill orders. Equipment financing is also popular. You could use equipment you own as collateral to borrow against and get money. They're only going to look at big equipment. They're not going to let you lump together a bunch of small office printers, for example. But if you have a big piece of equipment, you could definitely use that as financing. And the first and last month's payments are usually all they're looking for. And you get loans up to $2 million. Actually, we have loans up to $20 million with equipment financing. 401k financing. If you have a 401k, you can get, this is actually wrong. It's actually up to 200% financing on a 401k. You could put more money into the 401k and get up to a 200% if you're putting money in, or you could get as much as 100% financing borrowing against your existing 401k with a less than 3% interest rate line of credit, even if you have personal credit challenges. Okay, house reseller program. You can actually get money to flip properties. If you have a mid 600 credit score, some cash on hand and flipping experience, you could get 100% of the money you need to purchase and rehab a property as long as the after repaired value doesn't exceed 65%, about an 8% rate or so. If you have a floor plan, if you're a car dealership, you could get financing using that as collateral. If you have an insurance agents that have renewable commissions can use those as qualifying for financing. You get 2 to 3 times the amount of annual renewable commissions and sometimes get loans at like 10 years at really pretty good terms. So again, I say the same thing. The question isn't what kind of collateral will work. The question is what kind of collateral do you really have? And then the third C is credit. So if you have good personal credit, you can get unsecured credit cards with a personal guarantee. And if you have good business credit built, you can get unsecured credit cards with no personal guarantee. So if you're talking about the ones with good personal credit, then you can get personal credit for yourself or a credit partner. You can get approval amounts of 10 to 150 grand, no consumer reporting. Some even report to the business credit reports. They do require excellent personal credit. Of all the programs I showed you today, this is the only one that ever requires excellent personal credit, and they want to see you have low inquiries on your credit report. Now, and approval limits are usually equivalent to your high credit limit account now. With our loan program, we can get you 5 times the amount of your highest credit limit account now, and pretty good rates. I mean, 0 to 25% APR, same as normal credit cards, 6% intro rate for 6 to 18 months, same as normal credit cards. A lot of lenders out there charge 12 to 20% fees on this. We got a bank that'll do 9% fees, so you can pay anywhere in that range. It's a higher risk program, but it's pretty easy to qualify for. And unsecured credit cards using business credit, $10,000 to $50,000 approval amounts usually report to the business credit reporting agencies, not consumer. Take about 6 months to build and put on your credit profile, and personal credit's not used for qualification, and approval amounts are equivalent to your existing limits. So here's the deal. I told you several times in this webinar that I was going to tell you how anyone can get approved for financing. Well, if you have no cash flow or collateral, it's important to know that financing's out there, because as your business grows, you will have both. Okay, if you don't have good personal credit, you can always talk to somebody that's a good credit partner or somebody that does have good credit and use them as a personal guarantor to secure financing. And if you don't have anybody that you know that has good personal credit, your credit's not good, you have no collateral, you have no cash flow, then what you need is business credit. Business credit, any company can build. I don't care if you just opened your doors yesterday. I don't care what the scenario is. Any company can build business credit from scratch. And if you started from scratch, even as a new start of business, in 6 months, you could have that credit built to a point where you're getting $10,000 to $50,000 business credit cards. Everything you see here could apply to you within 6 months. And it's not like you have to wait 6 months to get money. You start getting store credit immediately. Right away, you start getting store credit, and then in 6 months, you build to getting business credit. I obviously don't have enough time in this webinar to teach you how to build business credit, although if you do go to my YouTube channel, you'll find a ton of webinars that I've done on that topic. And if you check your email, I will invite you to other webinars where we go over that. And again, same kind of terms as you would with personal credit. So that wraps up our webinar today. I hope you enjoyed this webinar. If you've been on my webinars before, you're already used to me. You know, I talk fast and I cover a lot of information in a short period of time. Okay, I believe in giving you a lot of free content as much as I can and as much time provided. So now you know exactly how to get approved for financing based on your strengths. You know SBA and you know what their requirements are, and now you know how tough it really is to get approved for those kind of loans. And you also know how to get approved for financing based on your strengths. If you have collateral or you have cash flow or you have credit, you can get money for your business. And we just scratched the surface on a lot of funding programs that fit within those 3 C's if you have one of those. If you have bad credit, if you have no cash flow, if you have no collateral, then what you need is business credit. You can build business credit, then use your business credit report to help you start qualifying for financing. And remember, business credit can be built individual of personal credit. So even if you have personal credit challenges, it won't prevent you from building business credit. If you want more information on building business credit for yourself, getting money for yourself, helping other companies get money and credit, reach out to me. There's my information. You can go to our main website, creditsuite.com. You can give us a ring at 877-600-2487, or you can send me an email, ty@creditsuite.com, ty@creditsuite.com. If you get in touch with me, I'll do anything in my power to help you, either getting money for your business, getting credit for your business, or actually offering credit financing for other clients. So again, I hope you enjoyed this webinar. My goal is always that you walk out of here with a lot of information that you didn't know before you came in. So I hope you got that out of there. And again, I want to thank you very, very sincerely for attending this webinar. I really appreciate you taking the hour out of your day to attend. So again, this is Ty Crandall. Thank you very much for taking the time to attend this webinar.